Hello, my name is Louise Gerling. I'm a Schools and Colleges Liaison Officer at Buckinghamshire University. Today I'm going to go through some of the information on fees and finance for those of you thinking about studying at higher education. This is a detailed presentation, so please bear with us as all of the information is important to those of you considering doing a degree. I should also note that the information in this presentation is not fully applicable to those students studying NHS-funded courses, initial teacher training, part-time, postgraduate, EU or international students, and those already with a degree. There are a few common myths that I'd like to dispel. The first is that you will have to pay all of the fees up front. That's not the case, as the government provide a tuition fee loan, and this will be covered in more detail shortly. Another is that if you take out a student loan, you won't be able to take out a mortgage. Again, this is not the case, as banks will not look at your student loan if you go and talk to them about taking a mortgage to get on the property ladder. Another is that you're expected to pay back all of the money that you borrow. We will cover repayments in more detail later on, but again, it's not expected that you will have to pay back all of the money. Finally, a lot of people think that they'll be saddled with a huge debt. Yes, you are taking out a rather large loan towards your studies, but the repayment side of it is linked to what you will earn and not what you owe, so it's more like a graduate tax. So as I mentioned earlier, the government provides students with a tuition fee loan that will cover the cost of the course fees for each year of your studies. This is capped at £9,000 per year, which is the maximum that universities will charge for their degree courses. This tuition fee loan is paid directly to the university, so you don't have to worry about this money going directly into your bank account or having to make the payment yourself. Part-time students are now also eligible for a tuition fee loan as long as the intensity of their course is 25 to 75% of the full-time equivalent. If you're not sure about this, you can talk to your university to find out the equivalency for your course. Every student will be eligible for a tuition fee loan as it is not linked to parental household income. So this is a non-means tested loan. While studying at university, you will need to think about how you will fund your living expenses, so budgeting is an important skill to learn. On average, you're looking at a cost of around £214 to £234 a week for living costs, and these expenses could include things like your accommodation, your travel, or your socialising. You do need to be aware that these costs will vary depending on where you decide to study and what your interests are, so you do need to make sure that you take this into account when you're planning your budget for the week. To help with the living cost expenses of studying at university, the government provide a living cost loan. 65% of this loan is guaranteed. The remaining 35% is means tested based on your parents' household income. Where you live will also affect the amount that you're eligible for. If you decide to live outside of London, the maximum loan that's available to you is £5,500, whereas if you decide to live inside London, the maximum loan available is £7,675. It's also worth pointing out that these figures are based on 30 weeks per year of your course, and there is additional means tested loan available for each extra week you have of study beyond this. There is also funding for Erasmus or overseas placements as part of your course. There is also a living cost grant that's available to students, and this is fully dependent on your parental household income. So it's a means tested grant. A grant is non-repayable, so this will be additional money that you're entitled to that you won't have to pay back, and this is to help with your living cost expenses for those who are on lower household incomes. It's worth always putting in for this grant, even if you don't get a large amount, because the universities will see that you're receiving this and they may inform you of additional money that you're eligible for from that university. It's also worth stating that in order to be eligible for the full grant, you'll need to be on a parental household income of £25,000 or less, and if you're earning £42,600, that's the highest wage you can be on and still be eligible for £50 of the grant. This slide summarises the loan and grant entitlement for students who are not living at home, so who are moving away to university accommodation, and the figures are also for students who will be living outside of London. So as you can see, if you're earning £25,000 or less, you'll be eligible for a total amount of £7,177, and then it's a sliding scale based on your household income. This slide shows the loan and grant entitlement for students who are living at home and also who are studying outside of London. If you compare to the last slide with a wage of £25,000 or less as the household income, you can see that the loan and grant entitlement reduces by about £1,125, so that you'll be eligible for £6,052. Now, this goes down by quite a substantial amount, so this is why it's important to discuss with your parents, if you are thinking of living at home, whether or not they'll be charging you rent, and if so, how much, and also looking at how much it will cost you to get into university each day. In order to find out more about the financial assistance that you're eligible for from the government, and also in order to apply for this financial assistance, please visit www.gov.uk/student finance. You should be aware that you need to apply for your student finance for every single year that you study, and you'll need to have completed your application by the end of May in the year that you're going to study. This will guarantee your funding for the start of the next academic year. If you apply late, so after the end of May, then the government cannot guarantee when you'll get your funding, so you'll need to make sure that you have additional finances in place to support you until you receive your loan from the government. If you're not yet sure which university you'll be studying at, maybe because you haven't picked your firm or insurance choice, or maybe because you're still awaiting your results, put down where you would like to study and make sure that you apply before the deadline, because it's easier to phone up the student finance company to change the university and the degree that you're studying, and you'll still then get your funding for the start of that academic term. Whereas if you wait until making your decision or getting your results and you don't apply for finance until that point and the deadline's passed, the government won't guarantee when you'll get your funding by, so again you'll need additional support available for you. As well as the funding options that we've mentioned already from the government, most universities will also offer bursaries, which are non-repayable pots of money that are open to certain types of students. So some universities may only offer bursaries to new students, or to students from low household incomes, or to students who are on a sports scholarship, so maybe you're playing a certain sport at a national level, or maybe you're on an academic scholarship, so you've received high grades in your results. In order to check what you're eligible for, you will need to do your research and compare all the universities that you're considering to see if they offer a bursary, and if so, what that is, and find out if you're eligible for it, and also how you apply for it. As an example, Buckinghamshire University do not offer bursaries as such, but we offer a package that's called the Big Deal, and we offer this in conjunction with the Students' Union. The Big Deal entitles all of our students to free sports, societies and recreational activities, as well as free entertainment and events, and you can also be paid to be a student representative or a student ambassador. This means that if you decide you want to join a sports club that you know you're interested in, or maybe join a new society, or you want to go and see a band that's come to the university, or a comedy, or the open mic night, you'll be able to do all of these activities without any cost to yourself. So this encourages students to attend as many events as possible, to relax and socialise with their friends, but it also helps expand their CV through the paid representative work. As well as the funding I have already mentioned, the National Scholarship Programme is also available until September 2014 entry. This is in place to help students who are studying a higher education course in England. This funding is available on top of anything else that you're already entitled to, and it's a non-repayable scholarship. You are only eligible to apply for the National Scholarship Programme if your parental household income is £25,000 or less. If you are in this bracket, you will be able to apply for the NSP, and they will also take into account things like disabilities, care leaver, maybe if you're from a partner school or college from that university, things like that. But it is really important that you do your research because each university does vary. The NSP awards will help students cover the costs of things like tuition fee, cheaper accommodation, help with travel costs, things like that. You will need to do your research as the package each university offers will vary, and you will need to contact the universities to find out about the application process and what the deadlines are for applying. It's worth noting that you can only apply for the National Scholarship Programme once you've selected that university as your firm choice. As an example, the National Scholarship Programme that Bucks is offering is as follows. So we will offer £3,000 worth of support in the first year of studies, and then £1,500 in the second and third year of studies. We will allow students to pick from the following options. So they might decide to get a discounted student fee, they might decide to get discounted accommodation, They might ask for discounted transport so that they can get the bus or the train, for example, to university. They might ask for funding towards their course costs, so maybe you've got a study visit or you've got extra materials that you have to purchase. Or you might be able to get a cash bursary of up to £1,000. As an example for the number of scholarships that Bucks is offering, for September 2013 entry, we have a total of 192 scholarships available, and for September 2014 entry, we have a total of 281 scholarships available. There is also additional money available to students whilst they're studying at university, and again this will vary depending on which university you pick and what they have on offer, so you will need to do some more research. There is additional money such as the Access to Learning Fund, the Bucks Advantage Bursary, the Special Support Grant, and the universities can also help students who are entitled to the Disabled Students Allowance to make sure that they get all of the money that they're entitled to, as well as helping them spend it on the ways that's most appropriate to support them whilst they're studying. These examples of funding are taken from what Bucks offers to give you an idea of what funding is available, but again, do your research to find out what each university offers. Once you have completed your studies at university and you've graduated from your course, you then need to start thinking about the repayments. So out of all of the money that we've mentioned, you will only repay the tuition fee loan and the living cost loan. And these are added together into one single amount, and that's what you repay. So the grants, scholarships, national scholarship programme, things like that we've mentioned, those are all non-repayable. So with the repayments, you won't start to pay anything back until the April after you've finished your course. So as an example, you might finish your exams around May time. At Bucks, you would graduate in September, but some universities graduate slightly earlier or slightly later, and then you wouldn't start paying back until the following April. So you've got a decent amount of time there, where if you've got a job and you're earning, you won't have to make any repayments. So all of the money that you earn is yours to help you get set up with your career. Once you get to the April after you've finished your studies, you will only start making repayments if you're earning over £21,000 a year. If you are earning over this amount, you will only pay back 9% of anything you earn over that £21,000. So, if for example you were earning £22,000, you were earning £1,000 over the threshold. Therefore, you would pay back 9% of £1,000, which equates to £90 a year. Here is an example of a payslip for somebody who is earning a wage of £25,000. So as you can see, the student loan repayment is taken out at source, so you don't have to worry about making the repayment yourself, and it's taken out before tax and national insurance, so it does reduce those figures slightly. This slide gives examples of how much your monthly repayment would be for your student loan if you're earning different types of wages, to give you an example of how the monthly repayments would alter. It's also worth noting that if at any point you start to earn more money, so maybe you get a promotion, or you start to earn less money, so you might drop below the threshold, the government will automatically become aware of this and will adjust your repayments accordingly. Interest will be applied to your loan, and this interest will be applied from the first day that you take out your loan, so from the day that you start your university studies. Whilst you're studying, the interest on your loan will be at inflation, which is the retail price index, and this varies year on year, plus 3%. And then from the April after you leave university, if you're earning below £21,000, interest will be applied just at the rate of inflation. And then there's a sliding scale up to the maximum of interest being charged at RPI plus 3% if you're earning over £41,000. This is currently how the interest rates are, and it's worth noting that this could change at any point. The loan will only be attached to you, the student who takes it out. It will not be transferred to any additional person. It's worth being aware that loans will be written off or cancelled if any loan, full or part of it, is left unpaid after 30 years, or if you reach the age of 65, so maybe you decide to go into university slightly later on. It's whichever comes first, 30 years or the age of 65. The loan will also be written off or cancelled if you become permanently disabled and are unable to work as a result of this. Just to remind you of a few useful websites which show you additional information on what I've discussed. It is worth taking a look at these so you can find out exactly what you would be entitled to based on your parental household income. What we have covered during this presentation is a good starting point, but it won't go into all of the detail that you need. So you do need to do your own research to find out exactly what applies to you and your situation. Thank you for listening. I hope this has provided you with an insight into student finance. If you have any additional questions or require any further information, please do not hesitate to contact us via the details on the screen.